Today is Monday, November 9th, and this is your weekly market update. We had a crazy week last week. Mortgage bonds went significantly lower on Friday due to the jobs report. The report came out much stronger than anticipated. Stocks were also lower on the news because there's still concern of the Federal Reserve Board increasing the prime rate by year's end or first quarter of next year. The October jobs report, which comes out the first Friday in November, showed that there were a whopping 271,000 jobs created last month. That's more than analysts had predicted out of 190,000. So mortgage bonds reverse sharply on this information. As mortgage bonds go down, interest rates go up. So we're seeing interest rates above 4%. The ADP report, which has been averaging about 185,000 over the last 3 months, came in at 271,000. So the BLS has caught back up. That's the monthly jobs number to ADP and higher. As you've probably heard in last market updates, the jobs report is one of the most important reports we see each and every month for the direction of interest rates and the direction of the stock market. There are two parts of the jobs report. The business survey, where the headline job creation number comes from, and the household survey, where the unemployment rate is derived from. The unemployment rate dropped from 5.1% to 5%, while the participation rate remained stable at 62.4%. The US 6, which shows total unemployment drop from 10% to 9.8%, the lowest U6 number in 7 years. Hourly earnings came in much higher, up almost 9 cents, which is a 2.5% increase over the year. This shows how hourly earnings has increased over the year. This is what the Federal Reserve has been looking for. This is really what wage-based inflation is. People are making more money now than they were last year. This means if the Fed was thinking seriously about hiking their rates in December, which Janet Yellen has talked about earlier, then this number has to give them an extra push in that direction or a green light, so to speak. It will be interesting to see what the Fed does. As I've maintained on here, there will be initial knee-jerk reaction if they increase the federal prime rate, but I really think over the long term interest rates will drop. So what we're faced with right now is higher rates. We're seeing rates above, around and above 4%. Rates have gone up substantially this month. Any of you that have buyers that are on the fence about buying, please let them know this information. Interest rates could be headed higher. Also, many people hear the Federal Reserve Board talking about increasing the prime rate. Although we feel rates could go lower from that happening, it's a good thing to communicate to the public to get them off the fence and help you make another sale. Anytime you need to talk to me about any of this information, happy to help you out. You can always reach me at 773-654-2031. Thank you for your business, and as always, thank you for your referrals.